Hi, I'm Bill Miller IV of Miller Value Partners. Because Bitcoin's price has been cut in half in the past year or so, there have been a lot of voices coming out saying that Bitcoin has no intrinsic value. Now, these voices always come out the hardest and the loudest after a big drawdown. And it's been a while since we last updated the world on our thinking around Bitcoin. I wanted to come out and tell you why I think the perspective that Bitcoin has no intrinsic value is fundamentally flawed. So I wrote a thought piece on it. I'm also a big fan of when Audible authors read their own work. So I'm going to go ahead and read the piece to you. It should be brief, and I hope you'll enjoy it. It's called The Intrinsic Value of Bitcoin. I recently had the opportunity to listen to a talk from an A-list entrepreneur in cybersecurity. Given his background and knowledge of cryptography, my hand was the first to shoot up at question time to ask about one of my favorite things, Bitcoin. It has no intrinsic value, was the response. Many intelligent people share this belief, which I do not presently find to be supported by logic or truth when considering Bitcoin from an appropriate variety of perspectives. The concept of intrinsic value varies with context. In the traditional financial sense, it means the present value of the future free cash flows an asset will produce over its lifetime. This might be why many finance professionals frown on Bitcoin. It produces no cash flows, and one's return on investment depends on what someone else thinks it's worth when the owner wants to sell. However, a lack of cash flow or popularity does not mean something has no intrinsic value. Ideas and their physical representations can have immense value, even if to only a small number of people who appreciate that the embodied ideas represent civilization-changing concepts. Assets that improve the world often go up in value over time as intellectually curious people with excess financial resources learn about them. The natural question then becomes, what makes Bitcoin uniquely qualified to potentially alter society for the better? At their core, fiat currencies are accountability systems backed by localized monopolies on violence. They derive their value from the state's ability to enforce contracts, collect taxes, and maintain constituent-sanctioned exclusivity on physical force within a defined territory. Every so often, local monopolies on violence disagree with other monopolies, ultimately culminating in war, money printing, and suffering. Indeed, the terminal value of an unchecked monopoly on violence is zero, which might explain why, as far as we can determine, every fiat currency in history has lost its purchasing power over time. Societies where control over the currency is most separated from control over the infantry may lose their value more slowly, but history has shown their accounting units lose value nonetheless. Understanding truly novel technologies and concepts requires internalizing wide contextual nuance. This is especially true for a new paradigm on what constitutes a robust system of capital governance. Money is a complex system that few people understand at a deep level. Indeed, more people probably own Bitcoin than could explain how new units of dollars or yen come into existence. Prior to Satoshi's white paper, no viable ledger system existed that combined transparent supply logic with truly decentralized governance and a growing physical energy requirement to create new units. It does now, though few people yet appreciate its potential to change our political systems over the long haul by obviating the most unaccountable actors and systems. If understanding the potential for society-altering technologies is a time-sensitive process, adopting them can be even more so. Consider that it took almost a century for running water to go from possible to ubiquitous, and the benefits of that system were much more immediately apparent than the benefits of a world opting into a Bitcoin standard. However, causal ambiguity in network formation has led to some of the most dominant assets of all time, and it looks like Bitcoin is on a similar path after 16 years of extraordinary returns. So, what exactly is the intrinsic value of Bitcoin? Putting a precise value on it is more art than science, but in a world with over a quadrillion dollars of capital, I believe today's market value for the network at 1.2 trillion is far too low. An incomplete starting point would be the market cap for gold, in many ways a functionally inferior substitute as a psychological check on profligate fiat behavior. If the entire world viewed Bitcoin as such, it would trade at 1.4 million per coin versus a current value near $60,000. Of course, it's much easier to exchange, store, and audit Bitcoin than gold, so this fails to capture its total potential. Viewed as a more robust network of capital governance, the potential should be far higher, and education takes time. It's still early.